The U.S. midterm elections are underway, as I said. All 435 seats in the Congress, the U.S. House of Representatives, are up. And of the 100 Senate seats, 36 are up this year. 35 are up. And there's 36 governor's races in the various states. While we may not even know the results for a while, what are investors to do? Here to discuss is John Grace, the founder and president of Investors Advantage Corporation, and Danielle Shea, the director of operations at Simpler Trading. Thank you guys for being with us. I really appreciate it. It's such a timely topic for today. But Danielle, let's start with you. How should investors be prepared for this election cycle?
Absolutely. Well, I mean, the first thing I can say is the best thing about this is it's going to be over soon, because the markets absolutely hate indecision and uncertainty. So I feel like the sooner we get the answer, the better. But, you know, between the two options, I think that the best case that we have for a rally is going to be a completely Republican-controlled Congress.
And John, what do you think? What's your take on what would happen in these circumstances?
Well, I mean, we can get hysterical, but let's go for being historical, and that would be looking at the history to look at the data. And what I see is, this is from Oppenheimer and the U.S. Congressional Report, 78% of the time, no matter who wins, the market ends up higher. So it's not like our friend in Florida who said the market's going to drop 15%. I mean, it might do that anyway, but it won't be because the Dems showed up.
You know, guys, I will admit right here, I got it wrong when Donald Trump was elected. I thought that markets would tank. So, John, you know, what you say may exactly be true then. Now, in my defense, and it's just a little defense, he came out that next morning when he did, and he was so gracious about Secretary Clinton, and I thought, hey, this is like the president-elect. He's going to change from the crazy campaign mode, and I was hopeful. That hasn't become the case, but markets have taken off anyway because of tax cuts. What sort of things out there, Danielle, whether or not it's further tax cuts or regulatory rollback or transportation, what things might happen given a new Congress that could impact markets?
Well, you know, the thing here is that, yes, there's been an awesome Trump rally, right? And I think that we could see a continued Trump rally. However, at this point, the biggest problem is rising interest rates, because that can absolutely slow down the economy. And we're set to see another one in December, more next year. So even if we do still get, you know, when I say that I'm looking for a rally, I mean a very short-term rally, because at this point we are going into midterms after a correction. And I am looking for a short-term rally, but in the long term, if you look at the long-term case, the fact that this earnings season we saw a lot of decrease in guidance, as well as more interest rates that are rising. So I think in the long term, we could see some downward action.
Yeah, and a lot of those companies, when they reported on those calls, Danielle, talked about their concerns about trade going forward. But let me ask you, John, about a couple of specific things. Think about, for example, if, say, you know, this probably won't happen, but say the Democrats won the House, which most people expect, and say they win the Senate, which not a lot of people expect. And there's sort of, you know, there's a Democrat Congress and there's a Republican president. There are some areas of agreement, potentially. Infrastructure is one. Democrats won it. The president's talked like he won it. They hadn't put much forward, but he's talked about it. And even on affordable care stuff, even on prescription drug prices. So might those be areas, if the Democrats won Congress, John, for us to look at the drug market and the and infrastructure, John Deere, CAT, et cetera?
Yes, absolutely. And let's look at it both short-term and long-term. And let's start with the short-term from the standpoint that markets love gridlock, okay? And it's contrary to most people's point of view. But when we go back to 1901, we can see that with a unified government, the average return has been about 9% per year. And with a divided government, the average return has been about 10% per year. I mean, you'll take any one of those numbers, either one of those numbers. But yes, I think infrastructure, the Democrats would put that in play. We had a lot of promises there. Nothing's happened yet. healthcare, regardless of who wins the White House, the Congress, the Senate, it doesn't matter. You got 10,000 people a day turning 65. We have to buy more healthcare as the baby boomers reach 54 this year to 72 this year. So that's not going to stop. So I think healthcare has done well. By the way, healthcare, whether it was the stocks or the real estate related companies, declined less in 2008 and rebounded faster, probably because of all of this demand, again, irrespective of political parties that might be involved. The others are financials. They've taken a beating along with the banks so far this year. You know, they're making a lot of money. Interest rates are going up. That is in their favor. So I think infrastructure, healthcare, financials, the banks, will do real well. And then finally, let's see, I have a list here, and that's, of course, tech stocks. They've also taken a hit lately,
Absolutely.
but they're usually the ones that lead us out of these things.
Well, we hope that you all will come back and when all of this is sort of settled and talk about what Congress might do if things change, both in tech and privacy and also with the financial sector. Danielle Shea, the Director of Options, not Operations at Simpler Trading. We love you coming on, Danielle. Thank you. And John Grace, the founder and president of Investors Advantage Corporation. Thank you, guys. We'll see you again.
Thanks, we'll see you next time, Bart.
Thank you.